What is going on, guys? Okay, so today I wanted to do something a little bit different actually. I'm going to show you a little tool that I use in my paper trade thinkorswim account. Basically use this on the side just to map out entries and stuff. So we're looking at these standard deviation lines. You can see these dotted lines, right? The blue dotted lines, and then red, and then yellow, white, yellow, red, blue. So we're looking at this custom standard deviation tool. So basically what this is going to allow you to do is, or at least how you want to use it, is you are looking to either buy or go short below these major lines here. Let's say we're looking at this yellow line here, right? Anything below that is generally going to be cheap. So if you're saying, okay, the support here, let's say the fake support is around 356. Well, okay, that's that orange line there, but generally you will see the price drop below that and tap the dotted line, and then you will see a bounce back up. So generally this is going to help you map out your entries. Here you can see it tried to test that level and it got rejected pretty hard, right? And so you can use this as resistance or support levels. Here, let's zoom in a little bit. Here it actually held that support, that solid white line, and it actually took a run, tested that resistance level, right? So these act as support and resistance levels. Tested that level, dipped a bit, held the MAs, and then made another run, right? And now it broke through that dash line, broke through. Now it's testing that next resistance level. So you can use this as a support and resistance, and you can also use it to help you map out your entries and exits. So let's say your strategy is to buy under the main standard deviations. Anything that's below the yellow or below the red generally are considered cheap, depending on what you're trading. You can't just trade any stock and say, oh, it's cheap. But if you're looking at the SPY, and you're scalping, maybe on the 15-minute chart, you can use this pretty accurately for support and resistance levels. Let me actually pull up the 30 minutes. So here we can see it tried to test that solid orange or yellow line here. It dropped below and actually tapped the dash line. And so generally, if you were a buyer, you would probably want to wait till that support fell through at about 353, and then you would start buying. That's generally where you would kind of use this. Let's look at another example. Let's say MTech, for example. So MTech is another good example of this. This one dipped down to 112, and it held that support. This is a 30-minute chart, and it's pretty low volume. So let's go ahead and pull up the hourly. So yeah, it's definitely very useful because anything that's below this orange line is going to generally be a cheaper entry. So if you were to want to buy in on this stock, you would look for that support to fall through, and then you would probably buy around where the green standard deviation line is, or even below that. In this case, the volume was so low when it dipped there that it didn't even, no one got filled there. And then the volume actually came in near that green standard deviation line. So you can use this to time your entries. And then again here, as it dipped, whoops, sorry. Here it dips down to 112. So it tests that green line a couple times there. You can see it dips through. So usually it's not going to hold that support of, let's say, $1.17. At that point, it was $1.15, $1.16. It's not going to hold that. If it's making those higher lows, it's not going to hold that. It's going to dip through, and then that's when you want to buy, is when it wicks down and it drops below that major standard deviation line, and that's when you can consider this to be cheap. If the trend is there, you can consider this stock to be cheap at that point. Now we can look at the daily chart as well. Where would you have used this, right? So I would have used it, I would have been buying below this major standard deviation line. That's where I would have considered this stock to be cheap. And that's where you really saw a lot of buyers come in, is below that major standard deviation line, that white solid line. And then the same thing happened here, drop below that solid orange line or yellow line, drop below and tap the dashed white line here and made a low of 101. And so we can use these even on the daily charts to help us time entries and to get quote unquote cheap entries, just by preparing in advance and knowing exactly where your spots are. So you could have said, as this was trading, at $1.20, you could have said, okay, I'm gonna wait for this to downtrend a little bit more, and then I'm gonna enter off of or just below that dash line there. You can see it drop just below a couple times, and then it bounced right back up. It's not always going to do that. It's going to depend on the stock, obviously. There's other factors at play, but if you're, let's say, day trading, I don't know, what was the main... I'll also post the custom script as well in the description, so you guys can use it for yourself. But what was the main runner today? TSHA. See, I don't even know because I haven't been trading these. TSHA. Alright, so we can look at this in terms of day trading. Okay, yeah, let's pull up the hourly or even just the 5-minute. So you can see that solid white line there. It tends to hold that support, dips just below a few times. And that's really where the entries are, is whenever it dips below that major standard deviation line. If the trend is there and the volume is there, if it dips below, normally that's a good entry. Obviously, it's based on where you want to enter personally, but it's going to help you kind of map out. This is a solid move today. So you can see that orange standard deviation line. It tested that in pre-market. It pulled back, and it held that dashed white line there. Once it held that, that was a good indicator that this may continue up, right? It held that and made some really nice wicks. It held the moving averages as well. And so this was a really solid move. Obviously, volume is important, but the fact that it held that is a good sign. And you can see this thing ripped up in pre-market. It tapped that green line there. That's really where the stock got quote-unquote expensive, and now I would say it's still pretty expensive. And this acts as some pretty solid support and resistance. So if this were to break, let's say it broke through this white dash line here like it did here on volume, you have a chance of it moving up to 264 and then 280 and then 3, right? So you're following these as support and resistance levels. So it's going to just give you a better bearing on where your support and resistance levels are. If you haven't mapped it out in advance or you're not following trend lines. Standard deviation lines are amazing for that. Let's see what other examples I can pull up. Let's see, MedP. Oh wow, this thing's moving on no volume. 40K, That's crazy. Okay, so MED-P. Oh yeah. Not really much of a day trader type stock. But you can see it hit that high of 224.42. That was really where that green standard deviation line was on the 30-minute chart. And then it tried to go for another move here, and that's really where it's kind of expensive, you could say. It had this exaggerated move anyways. If it had pulled back at the open, it would have been probably a nicer trade. If it had, pushed up a little bit, or it didn't break. Let's say it didn't break 205 and it pulled back down here to 195, or even down to 186. I would be entering in that range, and then looking for another move up if the volume is there. But here, this was so extended that the trade really wasn't there, I would say. Like, obviously there's an open trade there, but it's pretty sketchy. Just the way it moved in pre-market. But this is a great way to kind of, you can even just time your entries based on this. Here you can see it pulled back, held the moving averages, and then it ran right off of that that dashed white line, which is one of the standard deviations. It took a nice little rip, and then it had some trouble really breaking hard through that orange standard deviation. Got rejected down, and now it's kind of trading sideways, I would say, above the VWAP. Yeah, so that's another way you probably use that. It's such kind of a shitty example. What else we got? There's not a lot of good runners today. Weber. RNLX looks decent. There's a decent amount of volume. Wow, there really weren't a lot of runners today. RNLX. Yeah, this is a really nice one. This is a perfect example, actually. Let's go ahead and zoom in. Why don't we pull up the 15? Yeah, really nice example. Here we can see this broke through a 118, pretty clean here on a decent amount of volume. I mean, that's, it's pretty low volume overall, but it got most of the volume up here. But once it broke through that 118, 120 level, which is one of your resistance levels, and it rode that moving average pretty much all the way up, this is a really clean trend with a solid amount of volume. Broke through that 118, so that's another standard deviation area. And then it did the same thing here, broke through that next level, and it held your moving averages, and it was able to move up even more on some very, very abysmally low volume. Here it pulled back and tested that dash line and just continued up. And then now you can see there's a decent amount of resistance here at $1.50 to $1.48 zone, right? So that green standard deviation is now acting as a resistance level. So that's, another way you can use this. Let's see, do we have any good examples? I feel like all these stocks are garbage. I mean, TSHA was probably one of the best examples today. We can look at SOBR. That one's been running pretty nicely. So this one's just been in a clean swing trend, so this might be a better example. So really you wouldn't want, if you're looking at the longer term trend, here we go, 1 hour. If you're buying this stock, you should be buying at least below the white the white solid line here, white standard deviation line, because that would be considered cheap if the trend holds. And as you can see, it pulls back each time, and holds that dashed dotted line, or sorry, the dashed white line here, and drops below a few times and then makes another run, right? So this dashed line here can be used as a entry point, and even just a little bit below that. So catching the stock just slightly below that line. And here would have been a really beautiful ad here, because it was very, very cheap. Pulled back, got close to the next standard deviation. Yeah, that was a beautiful entry right there. Okay, so 15. And as you can see, obviously you can use this as support and resistance levels. And here pretty clearly taps that level, gets rejected, and then here it taps that next level, that next dotted or dashed line, pulls back, right? And then buys, you want to time them for below that solid standard deviation line. So you want to buy below those lines, not at them. So here you can see it dipped below again, and then took another rip. So it's one of the ways you can use this. In real time, it's easy to plot out your entries, follow the price action, plot them out in real time. So I will post this think script in the description of this video. But yeah, definitely try this out. It's gonna help, I think, a lot with timing entries and getting cheaper entries, safer entries. I think that's what everyone's after right now, is having a safe play and being in a safe stock. Speaking of safe stocks, MTech, beautiful stock. But here you can see on the daily, once it dropped below that major standard deviation line, that's really when it got cheap. I'm quite confident because it didn't drop any lower than that. It bounced right back just below that standard deviation line. It was really the mean, and it dropped below just so slightly here and then ripped back up. So that's why I'm very confident that this is going to make a really hard run. And then we can look for some levels here around $1.80, and then $2, and then $2.30, I would say. But yeah, definitely looking really good. And then here again, I talked about this, like dropping below those solid lines and buying off the dashed lines. That's really where you want to buy. Buy off of that and slightly below. And those are going to be safer entries, right? $1 one zone. Those are going to be safer entries. So always wait for those major supports to fall through and then start buying. Yeah, alright, so yeah, I'm going to post this think script in the description, and have a great rest of your day. Take care.